Good evening. Welcome to Kenya News Update today. I'm your host, and we begin with a story that's making waves far beyond the borders of Switzerland. The global reinsurance giant, Swiss Re, has just posted a staggering, record-breaking profit of $4.8 billion for the year. That's right, $4.8 billion. The announcement sent the company's stock soaring by 4%, and they're celebrating by announcing a massive $1.5 billion share buyback program. This is a monumental financial achievement, but what does it mean for the global economy, and are there any shadows behind this headline-grabbing number? We'll dive deep into the figures, the context, and the controversies in our 12-minute deep dive tonight. First, let's put that profit into perspective. $4.8 billion. To understand the scale, consider this: that profit alone is larger than the entire annual GDP of some small nations. It represents a remarkable turnaround and resilience in the face of what has been a challenging few years for the insurance and reinsurance sector, marked by natural disasters and economic uncertainty. The company's CEO, Christian Mumenthaler, attributed this success to what he called excellent underwriting quality and a disciplined approach to risk. In simpler terms, they chose their bets wisely and won big. The planned buyback of $1.5 billion worth of shares is a direct signal to investors: we are confident, we are strong, and we believe our stock is a good investment. This move typically boosts earnings per share and returns value directly to shareholders. Now, let's zoom out to the European market reaction. On the day of the announcement, the Pan-European Stoxx 600 index closed only about 0.2% higher. Most sectors were in positive territory, but Swiss Re's 4% pop stood out as a clear winner. This tells us that while the broader market was tepid, Swiss Re's news was powerful enough to create its own significant momentum. Analysts are pointing to several key metrics behind the profit. The company's property and casualty division saw a particularly strong performance, with a combined ratio, a key measure of profitability in insurance where below 100% means profit, of 94.7%. That's exceptionally strong. Their life and health division also performed well. But the question we must ask is, does this profit purely reflect business acumen, or are there other factors at play? Some critics argue that such massive profits in the reinsurance industry can sometimes come from tightening coverage terms, increasing premiums for clients, or benefiting from a relatively quiet year for mega catastrophes. It's a debate between rewarding shareholder value and the social role of insurance in spreading risk. This brings us to a crucial and much darker point of context. Swiss Re is, of course, a Swiss company. And today, we must examine a story emerging from Switzerland that stands in stark moral contrast to the clean, precise image of financial success. A former top-level Swiss football referee has been given only a 7-month suspended prison sentence and a fine of £1,046, roughly €1,200, after being convicted of secretly photographing and filming female football players in changing rooms and showers. The crimes took place during his time as an official at the Austrian club SCR Altach. Around 30 players were victimized. One former player has spoken out, calling the punishment a joke and asking, is this an appropriate punishment? This case forces a difficult but necessary parallel. Here we have a Swiss institution, the referee, an arbiter of rules and fairness, committing a profound violation of trust. Meanwhile, another Swiss institution, a financial titan, posts record profits. One story is about accountability, or the lack thereof. The other is about financial accountability to shareholders. The dissonance is jarring. It raises questions about values, justice, and what a society prioritizes. Let's stay with the theme of Swiss institutions and global football, because there's another anniversary today. Gianni Infantino, the Swiss-Italian president of FIFA, marks exactly 10 years at the helm of world football's governing body. He took over in 2016, following the massive corruption scandals that nearly brought FIFA to its knees. His motto was bringing football back to FIFA and FIFA back to football. A decade on, his tenure has been transformative, controversial, and financially lucrative for FIFA. Under his leadership, FIFA's financial reserves have swollen. The 2022 World Cup in Qatar, despite immense controversy, was a commercial success. Infantino has expanded the World Cup to 48 teams for 2026, a move that promises even greater broadcasting and sponsorship revenue. He has also championed the development of football in Africa, a key part of his long-term plan. In August of 2025, he met with Kenyan President William Ruto, discussing investments and the growth of the sport on the continent. So, we have a Swiss-led global organization posting record financial health, much like Swiss Re. The playbook seems similar: global reach, financial discipline, and expansion. But critics of Infantino point to the human cost, the treatment of migrant workers in Qatar, the sport's growing commercialization, and questions about the distribution of wealth. Is the beautiful game becoming a game primarily of beautiful balance sheets? Now, let's return to the core numbers and visualize what this $4.8 billion profit really means. We'll break it down. First, the profit itself, $4.8 billion. Next, the planned share buyback, $1.5 billion. Then, let's look at the stock's reaction, a 4% surge on the day. Finally, consider the company's key profitability ratio in its property division, a combined ratio of 94.7%. When you lay these figures out, the picture is one of a corporation operating at peak financial efficiency. But efficiency for whom? This is where the debate truly ignites. From one perspective, championed by free market analysts and investors, Swiss Re's success is a textbook case of capitalism working perfectly. They managed risk expertly, delivered incredible returns to their shareholders, which include pension funds and individual investors, and are now reinvesting in themselves through the buyback. This strength stabilizes the entire global insurance ecosystem, ensuring that when major disasters strike, Swiss Re has the capital to pay out claims. It's a virtuous cycle of profit-enabling protection. The 4% stock pop is the market's applause. From another perspective, often voiced by consumer advocates and critics of income inequality, such a vast profit raises questions. Are insurance premiums for everyday people and businesses too high? Is the financialization of everything, from football to disaster risk, creating a world where metrics on a spreadsheet overshadow human dignity and fair justice, as seen in the referee case? The $1.5 billion buyback is money that could, in theory, be used to lower premiums for policyholders or invest more heavily in climate risk research, rather than primarily boosting share prices. The 4% gain for shareholders contrasts with the 0.2% gain for the broader European market, highlighting a potential disconnect between corporate success and widespread economic health. Let's bring in a third, crucial layer: the global economic and political landscape. The current U.S. President, Donald Trump, who took office in January 2025, has championed deregulation and corporate tax policies that generally favor large multinationals. In a world where capital flows freely, a company like Swiss Re can optimize its operations across borders. Furthermore, the meeting between FIFA's Infantino and Kenya's President Ruto underscores how global institutions seek partnerships with national governments. For Kenya, attracting FIFA's attention means potential investment in stadiums, youth programs, and tourism. For FIFA, it means expanding its footprint and fan base. It's a symbiotic relationship, but one where the power dynamics are worth scrutinizing. Does a country gain more than just infrastructure, or does it also import a certain commercial model of sport? This leads us to a poignant human story that brings all these themes of risk, survival, and institutional response into sharp focus. It's the story of Nada Itrab. In August 2013, when she was just 9 years old, Nada was kidnapped in Spain and taken to the Bolivian rainforest. Against all odds, she was found alive 9 months later. Her survival was called miraculous. Any other child would have died, one authority said. But her ordeal didn't end there. She faced a long journey of recovery. Now, think about risk. Swiss Re's business is quantifying the risk of terrible events, kidnappings, disasters, accidents, and putting a financial price on them. Nada's story is the human reality behind the actuarial tables. It's a reminder that behind every insurance policy and every billion-dollar profit, there are human stories of vulnerability, resilience, and the need for protection that goes beyond mere financial compensation. It asks us, do our global financial institutions have a moral compass that matches their financial prowess? As we near the end of our deep dive, let's synthesize. Swiss Re's $4.8 billion profit is an undeniable financial triumph. It reflects skill, strategy, and a favorable environment. The $1.5 billion buyback and the 4% stock jump are the rewards. But this story cannot be viewed in a vacuum. It exists alongside a Swiss referee receiving a shockingly light sentence for a serious violation, a Swiss-led FIFA marking a decade of commercial growth, and a global landscape where the pursuit of profit constantly interacts with questions of justice, equity, and human value. The 0.2% movement of the broader European market suggests a world cautiously observing these giants, unsure if their success trickles down or remains aloft. So, what's the final analysis? Swiss Re is winning the game it set out to play. The numbers prove it, but society is playing multiple games simultaneously. games of justice, ethics, and human dignity. The challenge for the 21st century is whether these games can be brought into better alignment. Can record profits coexist with, and even fuel, a more just and accountable world? Or do they represent a divergence where financial metrics and human metrics grow further apart? The debate is open, and it's one we must continue to have. For now, Swiss Re's shareholders are celebrating. The victims of the Swiss referee are not. And somewhere, a survivor like Nada Itrab reminds us of the profound human stakes in everything we build, insure, and govern. Thank you for joining this deep dive. We'll continue to follow these intersecting stories. Subscribe to Kenya News Update today for more insightful analysis on the news that shapes our world. Good night.